Alright, this video gonna be about how to read a price chart. So real quick, we're gonna learn how to read the candlestick first, then we're gonna learn how to read how the market flows with the candlesticks. So first off, what we're gonna go over is the candlestick. So when you have a candlestick, you either have a bullish candlestick or a bearish candlestick. A bullish means the candle went up, bearish means the candle went down. So you got a bullish candlestick, the market, the candle opens down here and it pushes up and it closes up here. These little zones right here, you got these wicks right here in the middle. That zone, that's the high, that's the low. So basically, the market opened right here, say it pushed down a little bit, and then it shot up. It went up this high, but it came down and closed down here before the candle closed. So when you got candles, you got all these different time frames that you can look at your candles by. Right now, we're currently on a day chart, so every candle represents a day. So on this day chart, every candle represents a day. So I just showed you a bullish example. This is a bearish. So on the bearish, you have the open. So every candle, it opens where it closed at. So it closed right here. It opens here. It probably pushed up a little bit, pushed all the way down here, and then came up here to close. See that? So if I show you on a minute chart right now, I show you how a candle forms. So you can see how a candle forms and how it's moving. So if I go to the 1 minute chart, it represents every minute. Every candle represents a minute. You see a time right here, that's when the candle about to close. So you got 30 seconds for this candle to close. So let's look at this candle. So you see it's pushing up. Okay, so it opened right here and it's pushing up. We're gonna wait 15 seconds, see how this candle closes. You see how I made a high all the way up here. So if it pushes down, you're gonna see that wick I'm talking about. That's a bullish candle. See that? Alright, so now that you see how the market had pushed up there and it came down, it created a wick. That's how you get your wicks. Alright, now that candle is closed. Same thing. This next candle opens right where this candle closed at. So you see how it opened here and it pushed down a little bit. So that's how candles move. Alright, so now let's go. Now that you know how to read a candlestick, yeah, in the same candlestick it can turn from a down candle to an up candle because you're still in the same candle. So when this 30-second candle closed, that's how you're gonna know when the candle closed. Alright, so now you see how it moved up. First it was printing a down candle, now it's printing an up candle. So basically you're seeing how it moved. It went down, it created a low down here, and it pushed up. We're waiting for the candle to close, but we see it open there. See this open here. See that? Alright. So now we see how the candles move, right? Now let's look at how to read a chart. How do we read a chart? The market, every time a candle moves, so this candle moved down, that means it moved down. This candle moved up, that means it went up. So these 3 consecutive candles mean the market just went up for those 3 candles. Then it pulled down, went up on this 1 candle, and pulled all the way down on these 3 candles. So that's how the market looked. It went up, down, right? So the way you read a chart is, market can only do 3 things. It can move up in the uptrend, it can move down in the downtrend, or it can move sideways, which they call consolidation or choppy. So the market will start down, make a high, alright? That means it went up, pull down, make a low, and then push up. Alright, so the market moves in waves, just like that. So it goes up, pull back a little bit, push a little higher, pull back a little bit around the same area that it just broke, push a little higher, pull down a little bit, push a little higher. But say right here, don't break this high. Alright, so then it just start bouncing in between the high, the low right here, and the high. Alright, now that's when you got the market moving sideways. That's consolidation. So right here you was moving up, right? Alright, so you got an uptrend over here on this side. Uptrend. Why was you making an uptrend? Because right here, you made a high. Right here, you made a higher low. This low is higher than this low. So when you push up, you got a new high. All right, now this is a higher high. Why? Because this high is higher than this high, right? So when you pull it down, what happened? And it reverses. Now you make a new low, but this low is higher than this low. So what you got? A higher low. So when you got a sequence of higher highs and higher lows, you're in the uptrend. So this one right here, higher high, right? This one right here, higher low, right? Because this low is higher than this low, and this high is higher than this high. Simply put. So when you get to a point right here on it, when it start going sideways, where you're not breaking this higher high, or you're not breaking this lower low. If you're not breaking these levels, what do you have? Consolidation. Choppy. You know what I'm saying? Choppy market rate. So now we wait to see what the trend gonna be. So say right here, this thing broke down here, right? Now what happened? Now you got a low, because market moved low. But what is it? It's lower than this low right here. It broke this higher low. So now that's considered a lower low, right? So then the market gonna pull back. It'll pull back and start making waves in the other direction, right? And start doing the same thing that it did over here. So the drop, make a low, pull back, make a lower high. How is this a lower high? Because it comes and makes a high before it reverses, but this high is lower than this higher high over here. So when it comes down and pushes down lower, this low lower than this low, right? So if this low is lower than this low is lower than this low, you got a lower low. All right, so you pull back, make a new high. What you got? Lower high. Okay, why? Because this high is lower than this high. All right. So when you making lower lows and lower highs, what you getting? You're getting a downtrend. The market moving waves just like that. Uptrend, higher highs, higher lows. Downtrend, lower lows, lower highs. Sideways market, consolidation, choppy, whatever you want to call it. It's when it's moving sideways. All right. So that's how the market moves. Now that we see that, now we go over here to the side a little bit and we look at this. Once you set up your pips or all your charts, you're gonna have this looking like this. You know what I'm saying? So you can see what the market is doing right here. All right. What is it doing? You got a higher high, higher low, higher high, higher low. So what's that telling us the trend that we in? Uptrend right here, right? All right. So that's how you read a price chart. That's how you understand what trend you in. We seeing higher highs and higher lows. So we know that we in the uptrend. So overall, we see that the market is moving up. So we only want to be buying. When you're in the uptrend, look for buys. Cool. All right, let me move over a little bit. Over here, what you got? Lower lows, lower highs. See that? What is that? Downtrend. Look for sales. Right. So we see that, and we know when do we buy and sell. When do we buy and sell? We buy at higher lows. We sell at lower highs. So when the market prints a higher low, we want to get in for that push up. Market makes a lower high, we want to get in for the push down. Why? Because if you come over here to the right, if you get in on the higher lows on the uptrend, you're getting in for the next push. Get in higher low, next push. If you get in over here on the downtrend for the lower highs, you're getting in for the next push. Lower high, next push. You see what I'm saying? Alright, so this is an example of the market moving sideways, choppy or whatever, consolidation. So if the market like reach a high, so I'm gonna mark it over right here. Always mark your highs from the top of the wick down to the bottom. So what I say do when it's choppy, you move like this. And it basically not breaking no highs It's not breaking no lows. So right here, it make this high, push up, make this high, and then pull it back, and pull it down right here on this candle, and right here, this higher low point. This higher low point was never broken, and this higher high point up here was never broken. See that? So it chopped in this range until it broke out right here. See that? Then it started getting back on this uptrend move. So that's three things that the market could do. And when you're reading the candle, basically all the candle is a representation of a lower time frame. So if I bring this candle back one, and I bring this one up, this blue one, you see this blue one? If I mark the high down to the body, then the low of that candle up to the body, see that? If I drop down to the hour, it's basically zooming in what that day did, you know what I'm saying? So that was Monday right here. This whole up push, that whole up day is this on the hour chart. So that's how you can see what it did. So what did it do? It pushed up, right? So what did it make? A higher high, higher low. It was in the uptrend for the day. You know what I'm saying? If I go back to this bearish one, this down day right here, you know what I'm saying? I pull it back to that right here. On this down day right here, mark the high of that candle. Down to the body, then you do it down there too. Right? Drop down to the hour. What it do for Friday? It made lower lows, lower highs. You know what I'm saying? It's not really showing you, but you need to be able to look at these candles and see it. So it's going down, made a low, pushed up, made a high, came down, made a lower low, lower high. You know what I'm saying? Look at the candles, how they move. They go up and down. You know what I'm saying? So it made its way down on some lower low, lower high, down to down here. So that created a down day. You know what I'm saying? So when you look at the day, you drop down to the hour. This is 24 candles in this on this Friday. It's 24 candles on that because that represents the day. You know what I'm saying? 24 candles right here represent Thursday. And you can see what trend is doing in that day. So if it was moving down right here, what you getting? Lower lows, lower highs, lower lows, lower highs. You had it over here in this day. So if we look at the day chart, what did that give us? Down days. You know what I'm saying? So that's how you read a price chart, man. How to look at market structure, how to figure out what trend you in. If you're getting lower lows, lower highs, you're in a downtrend, you know what I'm saying? And that's how you know. You know what I'm saying? Right here, when it's this steep drop during the coronavirus, you got a lower low, lower high, lower low, lower high. You know what I'm saying? You can make money on this type of shit. Could have got in right here and caught this whole drop. So that's how you read the price chart, man. You gotta look at these charts and just train your eye. Feel me? Got your price over here on the right. You always want to read your charts from left to right because the candles print from left to right. And yeah, that's about it, man. That's how you read the price chart, how you find structure, how you find your trend.